The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour, the Wednesday edition, July the 24th. And my pleasure to be here Monday through Friday, 11 o'clock till 12 Eastern Time. And what a treat it is today to be able to go through some of the aspects of the Chapman wave in real time, as we do every single day. But the most important part of this particular session is that I'm able to go through chart after chart after chart that has made the requisite peak D, or maybe even an E, in the waveform that says, be a little bit cautious right here. Now, what's also interesting is as I kept perusing charts and listening to the news, certainly for the last 2 weeks, I don't think I've heard a single bear on the interviews on CNBC or Bloomberg. Very few people have even discussed, they would say that we're bearish, but right now we're looking for higher prices. Now, in the history of looking at charts, now looking at certainly the Dow, which I've made a call on the Dow, I would say, except for a few times a year when I'm away, or if I'm in Europe, or I'm somewhere where it's really difficult to get everything together to do it consistently, I've made a call on the Dow pretty much every single day since I'd probably be exaggerating if I said since 1980, because it actually goes back before that. But I would say as a professional, that is with clients, it certainly has been since 1982 to 84 professionally. The reason why I say that is when I harken back, when I go back in memory and I say, where were the times where the market made a high that just came out of the blue? It was just a quiet, a silent, a phantom reversal of fortune that really was not accompanied by bad news, but in fact was accompanied by really good news. There are two times I know of. The one time that stands out quite significantly is January of 2000, about the 14th, I think it was, somewhere around there. I was hand charting as well as I had been hand charting up until 87, 88. Then, of course, computers took over, so I was doing only computer work. And in that particular instance, that was the whole 1990s saw different chart formations that were always accompanied very soon after the top with really explosive negative news. But in 2000, because so many people were talking about, it must be close to the top, while at the same time, that's the right hand was talking, but the left hand was talking, the right hand was clicking buttons to buy. The market went to an explosive, all-encompassing rally January, February, March of 2000. And it went to, there were times at 9:15 in the morning where you would see a four-letter NASDAQ stock, it wasn't always four letters, but a NASDAQ-type stock open, and they were almost all IPOs, and within, it could be minutes, it could have moved 10, 15, 20, 30, 40, 50, 60, 70 points. That was really a major tulip bubble top. But that January high was not accompanied by much news at all in the Dow. And the Dow made a stop, and then later on the Qs, the S&P and the NASDAQ, both the composite and the index 100 made their highs. I had said at the time to subscribers and clients that as far as I was concerned, the NASDAQ had made a high that I would probably never see again in my market lifetime. So who knows? Hopefully I'll live long enough to say, oh, oops, oops. So let's just do this. At this particular point, you've got fantastic earnings. You know, Boeing, give me a break, Boeing. If ever there was a heavy-duty Dow stock, Boeing is it, making all-time highs. Great news. Nothing on the horizon. It just has ignored everything negative. That is the power of a stock that is really building momentum. All right, we'll look at Boeing in a moment. But actually, we'll do it right now. There's no rush because there's really not much to do. We've got a lot of things going on here. And look, Boeing's just made a leg E to the upside. So we've got a whole bunch of stocks. Let me just move this away because that's the 120-minute chart. So that's E. Oh, man, come on. Let's go. There it is, coming up. Okay. E in the daily, E in the weekly, and, well, it could be E/C. I'm going to call it E. At this point, I want to call it C/E in the monthly chart because the technicals are really strong, as they are in the weekly, except for one little thing. The stochastic, although it's at 87%, has been trending down for a little while. So there's a slight divergence. And the other thing that's really important is that I have both the RSI and on-balance volume already turning down. So, okay. Fine, let's just say Boeing's acting very well right now. There are some signs that it's getting a little bit toppy. But wait a minute. Ford comes out. Ford comes out and goes to what? Leg D. It was missing that D, and we discussed it. I mean, we're long. We've been long since 15 and a half. We actually been long many times. So the last time was 15 and a half. So it's leg D in the weekly, leg B in the monthly, trying to go for the 18.97 previous high of 2011 in a U-shaped formation. Nothing yet says that it's negative. How do you put this picture together to say that the lettering in the Chapman wave has gone to the normal letters that you would expect some kind of a pullback, and how do you deal with it? So let me run the numbers, and we'll go to our first caller because it's a great tie into what I'm looking at. And we've got the Dow down 30. Let me see. The Dow's down 37 at 15,530. The S&P's down 3.5 at 1688. The comp index is up 11. Now, the comp index being up, let's just check on Apple. Apple right now is up 24.23. What did it need as a subscriber sent me today? I love this. What did he say? He said, John sends an email saying, well, Apple needed a peak D from somewhere on the daily. They got it. And, yep, I agree, John. I don't know how it works. It was looking horrible yesterday and was down at 418.71, having made peak C, and yet 418.71 to 443. That's 43%, 18. That's 60 points. In the blink of an eye, we're talking 60 points in not even 2 hours. Isn't that incredible? And what's happening? It's just about to bump into a resistance line. Now, I'm going to talk about a bunch of things. What's most important about the bunch of things that I'm talking about is that there are chart patterns that we're going to look at. In my CD introducing the Chapman wave methodology, right there are a bunch of things that I'd like to look at just very briefly. There is an overview of basic terms. A bar, you can have the high, the open, the close, the low, and the high. And that's the bar. In candlesticks, what you've got is they fill in the distance between the open and the close, so it actually gives you a kind of a vertical rectangle, and it gives you the body of the candle. That's the trading range. So I don't mind. Whatever you use. I love using candlesticks in certain circumstances. I use just bars in others. I don't. In the Chapman wave, the core of it is to only identify the peaks and the troughs. I don't care what kind of candles you can use. There are all sorts of candles these days that you can get. I don't care. Now, there are peaks and there are troughs. What is a peak? It's just like an inverted V. If there is a higher bar, the entire bar and it keeps going higher, that constitutes the leg in a floating letter. When the very next bar has a lower high bar, that's the whole bar, not just the low closes lower, the bar itself. In other words, it goes to 20, it goes to 21, goes to 22. The next day it goes to 21.99, no higher, the peak. On the downside, if it goes 22, 21, 20, and then the next day, that's trough, leg A, lowercase a to the downside. The moment it has a higher low bar, the whole bar itself, sorry, a higher low bar, that is, it goes from 20 and the next day is 20.01, that's the trough. That's how simple it is. This is really the easiest. It is the most cognitive, easiest methodology I've ever come across in its concepts. Where it gets more complex is when the price gets more complex after D. And that's what all those decades that I've been working on this, where you can get information. So the leg is the thing that keeps going up or down until it makes a trough or a peak. A buy signal, buy mode, and a sell signal, sell mode. Those are the basic terms that you really want to know in the Chapman wave. And I'll discuss them right now because we've got our first caller. We've got on the line, we've got John in Knoxville, Tennessee. Hi, John. How are you? A little delay there as John was listening, I think, on his computer. And John, you're now there. I think he is there. Is he there? Is he there? I'm waiting. Is coming in. John, you there? Dial tone. John, call back. I know you waited, and you waited quite a while. Love to hear from you. If something might have happened, just call back. The moment you're back, Al, my engineer, will tell me. We're going to go to Robert in Chicago next, and then I'll be waiting for John. We got Robert and Dave. Robert in Chicago, how are you? Robert, is that you?
Yes.
Good. How are you doing?
Oh, very good. Thanks, Basil.
Okay. You'd like to look at?
Whole Foods Market.
Yes. And do you have any position at all at this particular time?
Yeah, I'm long it right now. And they report on July 30.
Okay. And you've been long
July 30 on August 1st.
July 30. Now, you've been long for quite a while, right?
Yeah, I have.
Okay. And I think we've spoken about this before, and I said just keep the core position and let it trade. And on some part of the position, you might want to have a trading stop. But now what I've got, and I'm looking at this really closely. Let me explain what I'm looking at. Folks, we're looking at Whole Foods Market, WFM, trading at 54.93. I'm a little concerned on the shorter term for a number of reasons. First of all, it's split. I've still got all the letters from the last period, so it must have been at some point. Did it split 2 for 1? Yes, I think it did, right?
It did. This is $108, $109, $110
Correct.
stock.
Okay, great. So now it makes it a little easier for me, and I'm going to explain what I'm looking at and what I think would be a reasonable strategy to implement. And we'll be right back with Robert in Chicago. We've got Dave in Boston. I'm hoping that John in Knoxville calls back. I'm sorry, John, that you got bumped, and I'll be back with you if you call in. Dial's down 26. I'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. Funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rose, Basil Chapman, David White, Larry Pizzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces. And over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. Basil Chapman, and we are on right now with a bunch of callers. I look around. Next thing I know, we've got Robert in Chicago, and who has WFM, which is Whole Foods Market, and he's been holding it for a while. The more I think about this, they are the number one in the field. There's just no question. Every time I go, I got two just within a mile either way of mine. One is to the right, one is just straight down towards Boston, and I frequent them both, and I am impressed at the way that they rotate, the way they are never standing still. I like that, and I grumbled about them at one particular point because I thought that they were getting a little excessive in their prices. I think they are. I don't know if they're being forced to do that, but at the same time, the competition is out there. I mean, even the Shores has organic, a lot of organic stuff, and they are keeping up the standard. But the price of the chart tells me you've got to be a little bit careful here. There's a potential that instead of being in B in the monthly, it is actually an F. The MACD is just trying to cross positive. The stochastic 75 rallying, but not yet strong. The weekly chart is really good, and there I've got a leg B, a brand new leg B. That is... I've looked at it. There's no other way I can count it. At least I don't. I suppose there is another way I could count it. But at this particular point, I like it. I don't want to interfere at all in your position, but I am going to suggest something. It's had a spectacular run. If you can afford to take a little bit off right here at 54.96, and I just mean you're whittling away. That's all you're doing. But the plan is that if it comes down from 54.96 and starts to make 53 a really strong support level, that at that particular point, I don't know if you want to put that back at that particular stage, but it's saying that if 53 holds, there's a chance that it's using up time rather than price. But my actual suggestion is that I think 53 is going to be broken at some point in the next few weeks, and that it's probably between 51 and 49, somewhere around 50, that I'd be looking at it as putting that particular amount back. I don't want to touch your core position. This could turn out to be one of those Rip Van Winkle, just buy and hold, even if there's a sharp sell-off at any point in the next few weeks. It's the premier company. I don't want you. It's very hard to get. I don't have to tell you. It's hard to get back in. It's easy to get out, but this is a tough one because it moves so strongly when it does. So that's my suggestion. Congratulations, holding the core position. If you want to take a little bit off here, you could even wait to see if it breaks 53 support. You got a 2-point differential. My thinking right now is I would just take a little bit off, reward yourself, and that's the amount of money that you will put back in, preferably about 3 points or a little bit more lower. Is that good?
That's fine enough. I just wonder if it if you're expecting it to pull back toward 49 over the next some weeks here.
Yes.
If it would do that on the earnings report.
And so that's on the 30th. You know what? We've got a little time. How about we look at this again together either Friday or, let's see, what is the date today? It was 2012, wrong calendar. All right, here we go. Today's the 24th, so Monday will be the 30th, and that is, Monday's the 29th. Let's look at it together on Monday, okay?
That's wonderful. Thanks, Basil.
Thank you so much, and congratulations. That's just stand by your stock. I'm impressed. Let's go. Now we can go to John in Knoxville. Hi, John. How are you?
Very well, Basil. I'm sorry I pressed the wrong button on my phone and hung up on you by mistake.
Funny how that happens, huh?
It happens. I was calling you about STXS.
Okay.
And I was wondering if this is a good point to have an entry.
Okay, now let's just talk about this, folks. This is the SPX, which is the name. Let me just put this over here so you can see it. If you're looking at the charts in Tiger TV, let me just, where is mine? Just disappeared. I want to get it back. So there it is. Okay. What I'm looking at here is that the SPX, and same as the DXD and same as the SDS, they all made their peak Ds. These are the inversion of the whatever core position it is on the long side. In this case, it's 300%, 3 times short the core. And the core is the S&P 500 or the SPY. And what it's done is it's made a trough D. No, 930, yes. No, it's made a leg D to the downside, made a peak D, now it's on a leg D down. Stochastic is flat at 3.66, and the MACD is starting to turn around. Now, this is so interesting because look what happens if I show you the SPY. The SPY is in leg E, probably making a peak E today, and the stochastic is at 95.71, so they're inverted basically. So I tell you what I'm going to do. Because it's 300%, and I have to be absolutely accurate. I don't want to give you anything accurate. If you were looking at the SH, I think it is, that would be different. That's 1-to-1. I'll be right back with John in Knoxville, and then we'll be back with Dave as well in Boston.
With over 3 decades of commodity trading experience, Andy Hecht has developed a system that combines both technicals and fundamentals. He calls this approach Technomental, and now you can put it to work for yourself with his brand new service, the Technomental Commodity Report. In this weekly newsletter, which comes out each Thursday morning, Andy gives you his analysis of the market price direction bias using fundamentals, and then specific trade recommendations including entry and exit points using technicals. The recommendations in the newsletter are always based on stocks and ETFs, so a futures account is not required, and Andy will often use options in the recommendations as well. Andy will tell you where to get in, where to get out, and he'll outline the risk-reward profile for all recommendations. To get your month-long free trial to the Technomental Commodity Report by Andy Hecht while locking in the low introductory rate, visit the front page of TFNN.com today. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. We're back, and we're on with John in Knoxville, Tennessee, and this is what we're looking at. In the Chapman wave, in the methodology that I use, when you get to the song itself says the wave goes to A, then to B, even the anticipated C and D, that's when it flashes a cautionary light, but all you got to do is make your stops real tight. Well, I have 2 ways of looking at that, and normally in the Dow, what we do is when we get to a D or an E, that's when I place some kind of insurance policy on the index itself. How much, whatever it is really contingent upon a number of things. And in this particular instance, the SPY is holding at 95% in the stochastic, and the MACD is still very strong. That says to me that that there's internal buying, and the other thing that's really important is that the VIX has spiraled in the last 2 days intraday, and yet the Dow and the S&P have barely been pushed down. And right now, the 9-period moving average in the VIX at 13.36 is in fact the high. 13.37 was the high, and now the VIX is at 13.01, and just 2 days ago it was at 12.07. So I'm getting signals to say we are getting very close to some kind of a pullback. So we've got to be careful. At the same time, in my opening call, in my Traders Corner, we've got stocks that are doing fabulously. So it really is stock dependent, and that rotational correction that we've looked at for so long is really what we're looking at in terms of the reason why I couldn't go heavily. And I even said to subscribers today, SPX SPXS is what we're looking at, but I'm not doing anything just yet. So there are a couple of reasons why not. And the most important is that although the 120-minute chart has made a peak F, look, it's only pulled back a little bit, even though the stochastic and MACD have pulled back. So this is a high-level consolidation, number one. Number two, the 9-period moving average at 160.19 on the SPY is still, we're at 106.09. The low today is 168.68. It still hasn't even come close to the 9 EMA. I'm absolutely sure it's going to hit 168.19 and then even 167.24. Will that be the signal, because it uses up a little time, to really pull back? Well, not unless the stochastic breaks down from 95% and goes into the 85, 84% area will I really get a signal to say that it's about to do that. So here's my recommendation. Because it's 300%, if I think it's SH, I haven't looked at the SHs for, the SH is the ProShare Trust Short S&P 500. It's trading at 28.05. That's not the SPX price, which is at 9.26. It's 1/3 higher. So that's your 300% differential right there. I'm going to make the recommendation that if you do anything, a preparation would be to start a small position on the SH, which is at 28.04, or a very small position on the SPXS, because it's going to be sudden bad news that's going to do it, and we haven't had any bad news yet, and technically I've still got about another 2-3 days to go with the strength that I'm seeing to try to bounce to either make new highs or... I have signals based on the Chapman wave. I don't have a confirmation based on the technicals that I use. Not yet. I'm getting there. It's not there. So I'm suggesting that I see limited upside at this particular point, and that you might want to just start a small position, realizing it's only a small position. So I hope that satisfies you. I know that in the next 2 days I'm going to get much better signals, and I might even turn out my opening call. We're already in position to take advantage of any decline. We're in a position to also take any inclines, any rallies. So I'm preparing in both sides, and we have one 200% short position in a particular sector, which so far is working very well for us. So it's very selective, and I'm going to say, if you want to just start in a position here, it's a starter position just in case we wake up one morning and the S&P is actually, for a change, down 15 points. But I haven't got the actual signal yet. This is just preparation based on the Chapman wave methodology. I don't think we're in for a recycle of an instant restart to start a brand new ABCD. I think this is actually a potential peak E today. I hope that helps you.
It does, Basil. And I want to thank you for such a level-headed analysis that you give daily. And I appreciate all the help you give it to us in the den and to all your subscribers.
Well, thank you. I really appreciate that. Thank you so much.
All right. Thank you, Basil.
And good luck with the trade. Thank you very much. I appreciate that. Bye now. So what we're looking at now, folks, this is going to be very interesting. So we had Robert talking about Whole Foods, and I'm a little cautious on Whole Foods, but overall still very strong. We spoke about the SPY with John in Knoxville. Now we're going to go to another caller. We're going to go to Dave in Boston. So we're covering all the spectrums right here, the important ones. Hi, Dave. How are you?
Basil, how are you? Hey, I'm following up with our favorite triple play here, Nugget. And
yes.
My question is, I'm still in it. I got a nice profit, but it did take a nosedive today, and I'm wondering, is it going to go low, or should I go out to the side and wait for a better entry, or is this pull back over?
I have to laugh. You say it took a nosedive today. It took a nosedive of minus 8.55%, but in fact, it still hasn't taken out yesterday's low. That's how powerful this has been. So I understand exactly. When you're looking at it in your portfolio and you see the price change so quickly, it can be accurate. It's quite awesome, actually, the way the moves of these 300%ers can be. Quite scary. Now, on a daily basis, 120-minute chart, I've got peak D and it's pulling back. Where to? 7.48. This is the NUGT. It is the direction daily gold minus 3 times bull. Bull. And it's had a fabulous move. It's gone from the 4.55 level to the high yesterday, or was that today? You have 8.57. I mean, that's almost a double. That is an incredible move. Now, let's just be as rational as we can. You've taken a little bit off. You've still got your core position. I've got it in leg C. Almost certainly today it's going to make a peak C, but that doesn't say that it could go to D. Look what Ford did. Ford went all the way to 17.29 and then pulled back all the way to 16.41 before pushing up over a point and a half from that low. So sometimes from peak C, getting to your D is exactly the way you've traded. You've taken something off. So here we go. I'm going to go back to the NUGT, and I'm going to explain something that it's very hard for me to say in a 300%er that you should keep a core position. However, when a particular sector has made such a huge move to the downside and then comes off the bottom, even though it gets readjusted at the end of the day, it's still a wonderful way to play it, especially if this is your way of embracing the whole gold sector and you've just got the one position. It's just easier to follow because all I'm doing really is I'm following not the GLD, which has made a peak D, and that says to me, yes, correct in being a little cautious, but the GDX I think is in C. Oh no, GDX itself has gone to D. So I'm going to base it on on your core position, which is the GDX. That is the Market Vectors Gold Miners ETF. Okay, so you've taken some off. Your original position in NUGT, I think, it was down in the 620 or something. How much was it? What?
Somewhere, it was like I think 670.
670.
Yes.
So now you see the difficulty here is. You've taken some off, so you've already locked in a profit. Yeah. If you were to take the entire position off, it's the 696 9-period exponential moving average that is most important, but that's on Nugget. I would prefer to go to the GDX, which is your core position, which is making a peak D right now. Stochastic at 91 is fabulous. MACD is very strong. Weekly, for the first time, is having wonderful positive divergences. It doesn't say this is the move that's going to take GDX all the way back from 27.45, which it's at right now, having made it 22.21 low. I mean, $5 is a big percentage, 20%. Okay, this is what I'm going to recommend. I'm going to recommend two things. One is that you've got a profit, but I'm also going to suggest maybe it's worth your while, because this is the 300%er, I hate to do this because it makes it so hard to get back in. But based on the dollar's trying its very best to make the 200-period exponential moving average at 81.85 some kind of support. I don't want you to get out of your entire position because you're in at a great position. It might sneak down to 690, maybe even 685. I don't think it's going to go into the 670s right now. But it would be horrible to give up gains that you've worked hard for and you've planned and strategized so well. So I'm going to... now, where would you get... See, I don't want you to make the stop where you'd actually get in. I learned that a long time ago when subscribers said to me, hey, you make your stops, so we love your stops because that's very often where we should be buying. So that was April a year ago, and I said to myself, am I nuts? That's exactly what I'm looking at. Well, why make a stop the very point that you'd actually start wanting to enter? So I'm going to make the suggestion right now. You take just a little bit more off at 773, but you still got at least half your position. You still got a good position, and you want to try to get back at about 696 to 688, and not the full position. You're going to put back, and then you're going to leave a little bit off in case gold, which has had a fantastic move, actually takes a bit of a breather, scares everybody before it starts to the next step. Because I have to tell you, the weekly chart of gold itself, if I'm looking at it, this is a really nice move, but it's a move that says very often you need to have one bit of a pullback and start to make higher highs and higher lows, and we haven't had a pullback yet. So I don't want you to take out your core position. That's good, but maybe take a little bit off here, and you'll start implementing your plan to re-enter on a pullback.
Gotcha.
Thank you so much, Paul, and congratulations. And congratulations on taking off right here at PT in the GDX. So we'll be following it closely. Thank you for calling. Let's go to Bruce in Lakeland. Hi, Bruce. How are you?
Hey, how you doing, Basil?
Good.
I guess I'm kind of building on the last guest you just had.
Yes.
I want to leg into the gold market. Some of the stocks, GLD, whatever. I'm not sure when or where to do it. I know you just had a conversation with that gentleman, but could you? Yeah,
but Bruce, it was a different conversation because he's already been in. You're looking to. Do you have any position in the golds now?
No, I don't.
Okay, so then make it real easy. If you haven't got a position in the golds themselves, then I'm going to suggest you start a position right now, knowing that in this particular move, it is probably peak D, and there's just a really good chance that it's going to pull back, and that would be with the IAU, which we trade in my opening call. We often have positions in this. We did have a position at $12.12, and we took a tiny loss because I was just I made the stop at 10. It was the exact low that got taken out, and it was difficult to get it back in. Thank goodness we've got a mineral stock that's done, and it's well over 25% so far. So I'm going to say to you, knowing that this could be a very short-term top in the IAU, at least start a little bit of a position right here at $12.92. That's like the GLD, but it trades at a tenth the price. Now, that's just a starter position to say, I appreciate that it could pull back. Everything about this move says that it should go higher. It has a target of 13.90, 92, 93. I don't want to overpay. I don't want to underpay. Because if you underpay, in other words, if you put in a bid at $12.40, it might hold the 9-period moving average of $12.69 and then just take off because the gold stocks were just slammed to the downside. But they've had a fantastic rally. So you've got to appreciate that you can only start a small position. You've lost the best entry. So safe entry. So there's no real safe entry, but the safe entry obviously would have been lower down before you got to peak D. Now we're at potential peak D. I'm saying the IAU, as your overall gold, rather than gold stocks, your gold position is there. Now, if we're looking at specific, name me a stock that you've been looking at in the golds.
Actually, about three of them probably. El Dorado, GFI, AG.
So GFI right now is at A, B. No, this is, yes. So this is right now in leg D. You see how they're all working in unison? I like that. So this is A minus, then it starts again. It goes A, B, oops, not a V, but a B, C. And this is leg D in GFI, trading at D. Trading at $5.91, having made a low of about $4.60 something. So that's good. But this is only leg A up in the weekly chart. So it says now, I would not say that the weeklies are going to go to A, to B, to C, to D. This is a counter trend rally which could very well fade at B or C. And right now, 807 is the 9-period moving average in the monthly chart. And that's 2.5 points away, 2.25 points away. I think that's a little high. So here's my recommendation. We've got a break coming up. What I'm going to do is I'm going to do just, it says GFI, A, what did you say? Give me the symbols. GFI?
Yes, sir.
And the next is A?
EGO, NAG.
And NAG?
Yeah, El Dorado, EGO, and AG.
Okay, got it.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, the Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Nowhere, spelled N-O-W-H-E-R-E. At one point, we've all been there. Whether it be our health, career, or our finances, some might be there right now. So where are you when it comes to your trading and investing? Better yet, where would you like to be? The good news, I can take you from nowhere to now here right now. Same letters, N-O-W-H-E-R-E, just a totally different emphasis and focus. Hi, I'm Steve Rhodes with TFNN, and on July 25th at 6:30 p.m., I'm going to share with you a trading strategy that I began on May 10th when the S&P was at 1627 and closed at the same price 8 weeks later. That's right, the S&P went nowhere versus a trading strategy that produced a 100% hypothetical return in that same period of time, and it's now here for you. Subscribers to my daily newsletter service, Mastering Probability, have free access to this exciting live workshop. The trend is your friend. All the details are on the homepage of TFNN.com. Decisions shape your destiny, and your trading destiny is now here for you.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
We are back in the remaining minutes we've got. We want to go back to Bruce and Lakeland. We're looking at the gold markets now. So, Bruce, this is what I'm going to suggest. I wouldn't be surprised with the steepness of the move that we've just had in the golds. And now there's all this talk, many people are talking about the gold stocks, that there will be a pullback. So here's my price. At GFI, I would say it's at 591. I would start a small position between maybe 562 to 547, somewhere in that range, and you'll have to give it a little bit of a stop, maybe 520, something like that. But probably a small position, I'd make the stop wider because the weekly chart says it should try to rally towards the 6.38 level, which was the high of the 6th of June. That's number one. And then if you look at Ego, and I think these are nice picks, although the monthly charts are horrible, but I'm talking about shorter term. Ego is, whatever it is, Eldorado Gold is close to the 836 level of the last high of the 6th of June. It's at 779 right now. It made a high today of 814. I would try to pick that up between 732 and 718. 704 is really the area I'd be watching it closely if it pulled back there. But once again, if it's a smallish position, and then I would be looking, you can call in and we'll look to see how you would be buying strength after that, because I don't want to buy any very sharp pullback, just in case the dollar, for whatever reason, suddenly has a rally, because this market is starting to dip and slide a little bit more. So those are the levels I'd be looking at. So I hope that helps you.
Oh, that's great. Thank you, Basil.
Thank you very much for calling. I appreciate it. We've got a call. We've got Brett in Denver. Hi, Brett. How are you?
Hey, Basil. Thank you so much for taking my call. Listen,
my pleasure.
I was looking for an entry position on the SQQQ. Which is
okay, so that's short the Qs. That's the triple. Is that double or triple?
Triple, and it's based on what I've seen the last couple weeks.
Okay, so
not today.
Okay, so you're this is something you would like to go into.
Yeah, maybe next week.
Okay, so this is what I'd be looking at. The SQQQ is trading at 24.72. It is the ProShares Ultra Pro Short QQQ series. So if I go to the Qs, I'm still of the opinion that there's a really good chance that the 75.74 highs that was hit twice last week, at this point I'm thinking that it is a short-term top, and it isn't B, but it's peak E, and that corresponds to the resistance. So I'm going to make the suggestion here, because you got the triples. This is, not everyone must do this, folks. Brett understands these. I know that from his voice. He's been there before. If I was to start a position, I would start it right now at 24.72. If you give it a stop, giving it a stop 1 penny below the 23.83 level of the 17th, because it's a smaller position, I'm comfortable with that. I don't know if you are, but I would not go more than a 1.10, 1.20 as a stop on this. That's too much. I would make the stop. In fact, I'd even say to you that if it even touched the bar of the 18th, the 24.29 high, I'd be saying maybe I don't want to hold it. And the reason why I'm suggesting it is that the volatility index is saying to me there's a good chance that some type of consolidation is going to take place, number one. Number two is there are so many NASDAQ stocks that are actually having a really tough time now. I think it's the right position for a trade. As a position play, I would probably say to you, no, let's rather go to the QID. But as a trading position right now, I think the risk reward says, yes, this is a good chance to take it. And with a 1 point stop, less than that, actually a 90-cent stop, I think it's reasonable to do. Good risk reward, so that's the way I would play it. Small position, even though it's a 300%, and you could add to it you can add another small position if it breaks above 25.30. Goes to 25.31, then you can add to it. Hope that helps you.
Thank you, Basil. Have a great day.
Thank you for calling. Thanks, everyone. Thanks for being here. Stay tuned. You've got Wednesday. Larry Pesavento. Should be a wonderful show with Larry. Gee, I had all these charts I wanted to show. I'll do that tomorrow. Thanks for being here. Have a wonderful day.